Welcome back, Alpha Hunters. Okay, so today we are going to look at a stock, give a little stock review on a company that many investors probably use, might use, maybe use, I've at least heard of. I would be willing to bet that many of you have heard of this company. It's called Robinhood, ticker symbol Hood, H-O-O-D. The Robinhood Markets Company. So let's take a quick look at, if you're not too fully aware of who they are, what they do. This is their webpage. They provide commission-free investing. They started out as a stock investing brokerage, and then they moved into options, and then now they do allow you to do crypto. They also have a cash card. So there are different things that they offer now. It's all commission-free. And we will get into why that is a big problem, okay? But that is pretty much Robinhood in a nutshell. It's not hard to sign up for an account. They mostly started off on the phone with an app, not really a website, even back when they started. So that is pretty much Robinhood, okay? Now, as we look at the stock chart, we can see we have a long downtrend. Now, this is all their stock chart as they IPO'd back in July of 2021. So this is their entire history of their stock chart, okay? Now, I know people are very, very curious whether or not this company is a good buy at these low levels. Better than a buy at the higher levels when they IPO'd. But as we can see, when they IPO'd, they just kind of popped for a few days, and then they just kind of sold off, and they've kind of sold off ever since. And their all-time bottom was back in January 28th of 2022. So with all that being said, is the pain over for Robinhood? And it's really going to depend upon one factor above all else. They need to find a way to bring in more revenue without increasing expenses. All right, that's always a trick to business. It's a painful one for them to figure out, because they have marketed themselves as the commission-free broker. Okay. And back when they allowed you to buy and trade stocks before they allowed options on their platform, they probably were not having too much of a problem with people staying above water on their platform. Okay. But you can go look at Wall Street Bets now and any other online investing marketplace, and you'll see a bunch of meme posts about, not mean, but meme posts about how people have blown out their accounts. You know, they've lost it all since they've started trading options on Robinhood, because options, they are much more difficult to perfect than stock. Stock is a little bit easier. You know, you can just buy it, wait for it to go up, and you can sell it. You know, just give it time, and you probably most likely be okay. Options is a little bit different. You have a certain time period. You need to be correct on that option. So the problem with Robinhood and its customer and the relationship that they have is they do not charge their customers for trading. That includes options, okay? So if you do not charge your customer even the fees that you pay to the exchanges to execute the orders, if you do not charge your customers those fees, well, then you have to make up the way you are paying those fees. Now, we all know Robinhood makes their money by selling order flow data to other, I'm gonna say bigger investors, like hedge funds, other larger investors that want to basically jump ahead of Robinhood's customers. Honestly, that's really what they're trying to do. They're trying to jump ahead of Robinhood's customers so that they can get the bump in the uptick of a stock price, or they can get out of the stock before Robinhood's customers can. So that kind of bodes a problem, right? Even though it seems like they're putting their customer first, it kind of seems like they're not, because that is very much a problem. If they're selling your data, the customer's data of Robinhood, to somebody else, and then they're jumping the order of a Robinhood customer to get into a position, that's not exactly a customer focused mantra, even though they think they're customer focused by not charging fees. Okay, so I'm gonna get back to not charging fees right now with the exchanges. Okay, so when they send an order to the exchange and it is executed on the exchange, they still have to pay the exchanges for that order to go to the exchange and execute on the exchange. This is where they are taking all the cost and they're paying for it, and they're not charging their customer. So since they're not charging their customer, they have an expense that they're not offsetting. Where they get into an issue is they are selling that order flow data to, the other larger investors, okay? But what happens when people trade options, especially newer investors, they're not good at it. They usually wind up busting their accounts, blowing out their accounts, or growing large enough. And here's my two things about the customer side. One, usually, if you use options, you lose all your money and then you have no order flow data, right? If you lose all your money in Robinhood trading options, then you have no order flow data, which means then you don't have any data that Robinhood could sell to make money off of you. So that's a problem. The other one is you wind up becoming really successful as a trader on Robinhood. Well, when you become large enough, I would say when you get your account over $30,000 roughly, I would say you're large enough. You might not think that, honestly, you might not think that, but as a trader, yes, $30,000 is probably a large enough account to where people want to know what your order flow data is. But $30,000, I don't want people jumping ahead of my orders. And this is always the problem I've had with Robinhood, okay? Robinhood does not cater to my investing, because if somebody is able to jump ahead of my order, then they're getting the deal and I'm pushing their profitability up, not so much the other way around. So if you do have a $30,000 account or more, the issue with staying on Robinhood is they're selling your order flow data. And even though you think, oh, but I'm not paying commission fees. Let me just very quickly explain this to you, okay? Commission fees, what Robinhood has done with the commission fee and brokerages is amazing, and I will forever thank them for that. They made my commission fees a lot cheaper. So most brokers out there no longer charge commission fees. Most brokers only charge fees that need to go pay the exchanges, where your order goes and gets executed. That's the only fees they pretty much charge now. And that is almost universally standard. That's why all these other brokerages don't have the problem that Robinhood has. So if you're over $30,000, you're like, well, I'm not paying commissions, so that's awesome. But they're selling your order flow data. So instead of getting in on, an options contract at $2, maybe you got in at it at $2.10 per contract, then that's a big problem, because that $7 that you were paying just for maybe the commission on the other brokerages, but now you're paying $2.10 because somebody else jumped you and got a better price than you did. What I'm trying to get at is that if you're a large enough investor on Robinhood, they sell your data, someone jumps your order, and then it costs you more money to get into that trade at a higher price than what it would have on another brokerage, even though you paid for your commission fees on another broker. It's not beneficial to you. And when you do get a bigger account, and I've seen some other like YouTubers and people that trade off of Robinhood, and they have $1 million accounts, and it makes no sense to do that because they have large enough accounts to where Robinhood's selling their data most likely costs them more money, even though they're not paying for commission fees, because they're selling their data. Somebody else is jumping in front of their order, but then since they jump in front of their order, it pushes the price of whatever they're trying to get into up, and therefore makes it more expensive. So even though you're not paying for commission fees, you're paying a higher price on the actual investable asset. That's the problem, okay? So that is something that Robinhood needs to figure out. So with all that being said, let's come back to, is Hood investable? I'm going to say no. I'm not even going to look at option chains on this, because until they figure out how to get past their ideals of, we want commission free everything, and maybe they go the full on Google route where they put ads on their pages, all that stuff. Maybe they will in the future. I don't know. Obviously, we've seen them move into the options market, the crypto market. They have their own card now. Maybe they will move more into advertising on their web pages, bringing in advertisers and stuff like that. Maybe they will. I don't know. But they need to do something, whether it's advertising or charging. I'm going to say charging commissions, which is one of the things I think they probably will do, is charge commissions. Maybe not for Robinhood to take profitability, but at least the exchange commissions that they pay to the exchanges. Okay? They just need to rework how they view their business model, because right now it's not successful. This is why they keep losing money. If you look at their earnings, they have, they're all negative. They're negative. They're not even going in the right direction, really. So this is something they really need to fix before it's worth an investment of any kind. Now, if it gets down to like a couple bucks, what is this all-time low? This all-time low is $9.94. Okay, $9.94. If it gets maybe like half that, maybe under $5, and you just want to, you got like $100 lying around, you're like, you know what? If Robinhood does wind up turning around, I'll just throw $100 into it, and you buy 20 shares. Okay, all right, fine, but I wouldn't put anything significant into Hood at all. I really wouldn't. This is like a no-go zone until they figure out how to change their business model and how they can bring in their revenues to offset their expenses. I wouldn't do it. And that's like the double-edged sword that Robinhood has. Either people are so bad at trading they wind up losing all their money with options, and then they don't have any order flow data, or they're good, they build up an account, but the free commissions, but they sell your data approach actually winds up hurting those customers more. And if I grew an account on Robinhood, I would leave once I grew my account, because then it starts to cost me more money as other traders, they jump my positions, my order entries. That's the double-edged sword that they have. They need to solve that. I don't know whether they do or not, but my guess is they will do some pretty dramatic, there's that word again, dramatic measures as the stock price probably continues just to go down. It'll probably break $9.94 unless they announce something soon that they're changing their approach to commissions and fees and stuff like that. But don't get me wrong, Robinhood and what they have done to the brokerage marketplace, bringing in an understanding of investing to investors, is what they have done on that side has been great. I'm always going to be grateful for Robinhood for at least bringing down other brokerages' commissions and fees. It's helped me out. I've never even used Hood. I've never even used Robinhood, but they've helped me out. So those things are what Robinhood's known for. But as far as like a great business model, it is not something that is sustainable. So they're going to have to do something dramatic to change their fortunes, I guess, if we want to call it that. So we'll see if they can change anything. I don't really dig it as far as like an investment or of any kind. Now there's going to be trading opportunities obviously along the way, because the stock, Hood is going to move. It's going to move up and down, but it's one of those things that's going to be too sporadic to really kind of plan out. So if you're going to do anything, like we have this pop here recently, I would look probably more for probably continued selling. So I would just do bearish stuff above it. If you're going to do anything, I would definitely keep it small. Whenever you get bullish pops like this, wait for this settle out, and then I would just do bearish credit spreads above it. That way you can just kind of get in some positions on them if you really want to play it. But to me, it's just going to be a little bit too unpredictable because their business model is not one for sustained success. But if I was starting out, okay, if you were starting out and you want to get into investing, you have a low amount of money, Robinhood, the app, is a really good area to start because of the no commission fees. That is about the only thing I would actually recommend about Robinhood is if you were starting out and you have a small account, I would say anything under $10,000, I would definitely start out with a Robinhood. Absolutely. If you were able to grow your account to above 30,000, I would leave Robinhood. Like that would be my best advice in pertaining to Robinhood. Absolutely. So that is what I got for Hood. Honestly, it comes down to their parent company's business and kind of what they're doing there and how they can make changes to their business and how they can keep customers and how they can keep customers from blowing out accounts. Alrighty, take care, Alpha Hunters.